This is the corrections to the P. Lynch incomplete question from 2007. So far I've gone through goodwill, cash, bank. I've gone through investments. That's the investment fund that we looked at in the last class. Again, we looked at all this Thursday. We looked at obviously finding credit sales through our debtors control account and then finding total sales. This is a repeat of the both questions so far. I've had this. Both questions so far have had creditors control account into total purchases. We've also looked at insurance where we had 3 months paid already and then we had paid for another 12 months. So you needed to find that 3 months was prepaid for next year, a current asset, and the rest was an expense. So we looked at all these already. There's a few more notes that we hadn't looked at. We had looked at loan interest here. This one was a little bit more complicated because when this one here, we found that the loan interest for the year was 3 grand. But we found that 20% of it was basically drawings. So we had to get 20% of that, drawings, the rest here P&L. And obviously then we looked at how much or what else we had really on loan interest. So we found that there was already amounts paid into the bank. I'm just going to scroll up to that there. Loan interest here we had paid into the bank 2250, so that's on my credit side of my bank account. Therefore it's on the debit side here of my loan interest account. The only other figure left remaining was the amount that you haven't paid yet, which here is 750, which is my current liability. Loan repayment was the last one that I had looked at the last day. And for this one here, basically the loan is 180 grand. Because we're doing the investment fund, the loan actually isn't going to be paid off at all until the year 2015, which is 9 years away. So for the next 9 years, we're not going to be repaying any of the loan. So there's no short term, we're not doing the whole, as I said in the last question. The last question for me, Kelly, was different because it said the sum borrowed would be paid equally over 6 years, commencing the next year. But for this, we're not paying any of the loan back soon. So all of it is a long-term liability. Now, I want to go through the remaining notes and then I want to show the accounts. So remaining notes here, so our furniture note, we have estimated that 25% of it is for drawings, and we have paid here 14,000 for our furniture. So for our furniture note here, my bank is 14,000. Obviously this is money out of my bank, and therefore I'll put it on the debit side here, 14,000. My drawings is 25%, and the rest of it is my financial fixed asset, or my fixed asset, sorry. Drawing or furniture there is quite simple. Again, just 25% of it goes to the private use, so the rest of it is for the business. Wages. Now we're told at the top of the question, if we look up here, that we have wages due of 2,600, but there's nothing else in the question to do with wages. So if I look through this here, I'm going to have to fix this with something. I can't just leave it on its own. It has to, because it's an adjustment, it has to go with something here. So it's going to go with general expenses. So I'm going to do a general expenses account, and I'm going to include the wages due in as a general expense. Wages due is a liability. So it's obviously going to be a liability at the beginning of the year, 2,600. The general expenses is a bank payment, therefore credit side of my bank, debit side here. The difference is my P&L figure. The difference is my 71,200 for my wages. Light and heat, again in this question there was no electricity at the beginning of the year that was due, and there's no stock of oil at the start of the year. So the first thing you have here is actually your light and heat going out of your bank and on the debit side of your light and heat account. Apart from that, we're told at the bottom, we are told that our light and heat electricity due is 480. Therefore it is it's on the debit side here with balance carried down because it is a liability for next year. So the 480 electricity due is going to be shown here. This is the balance carried down. Now you have both those figures in, and you don't have anything else, but you're told 25% of light and heat is for the private section of the business, 25% of light and heat used. So this is the amount that I paid for light and heat this year. And I also have electricity due at the end of the year, 480, which means electricity I haven't paid for yet, but I've used. So this totals up to 5880. And this has to be divided on the credit side between what is drawings and what is P&L. So the P&L is obviously going to be the remaining amount. I'm just going to show this just to show where that came from. Drawings is 25% of what's used, so we used 5880. 25% of it is this guy here, 1470, and the remaining amount there is going to be my P&L figure. It's the 75%. This is the amount of light and heat that was used. They're the two figures we got. We just put them in. 25% of his drawings and 75% is P&L. I've left a little gap here because a lot of the time, usually on this side, there might be a stock of oil at the beginning of the year or something like that, but there's not in this question. Or maybe a balance carried down here for stock of oil at the end of the year. But that was all we had to do for the light and heat. Buildings was very simple. Premises at the beginning of the year, an asset of 560, and then we bought a building for 155. Don't forget this part here, the fact that this large exchange that happens has to go somewhere. So that's your loan figure. And this here is your money that you paid from your bank to buy your building. Therefore, at the end of the year, it's 715,000 worth of buildings. I think it's our last note here is drawings. So for this last note, I've drawings, light and heat, furniture, cash, purchases, and loan interest. There's 5 of them there. You'll find all 5 of them have been included on the credit side. 1 of them there for light and heat. Again, our furniture is there, our loan interest is there, and the top 2 here are our total stock purchases, and finally at the top we have cash. All of these notes were previously done out, so just make sure at the end that you show your drawings note. So my drawings note there finishes my drawings at 23770. Now for the accounts, I'm going to quickly go through this because again it is the same. Total sales, well, I got that from above here in my total sales account, and my total purchases is the same. So my total purchases were 148,400 and my total sales were 374,800. Again, you're getting all these figures from the notes that we've previously done out. Let's go back to my P&L. My opening stock is given at 19 grand. My closing stock, again, don't include heating oil, but it's not here in this question anyway. My closing stock is 16,400. So we know where all these figures are coming from. Again, just add opening to purchases, take away the closing stock. These are my cost of sales. Take away the cost of sales from the sales, gross profit. Now, what else do we have? Well, we had interest from investment, and I had said this the last day to add this as an add gain. At the end of the year, you're told that 25 euro from interest was earned from the investment fund. So when I go back up to the investment fund here, I can see that we had our amount that we invested for each month, and then we showed the 25 euro interest as a P&L figure. Even though it's at the bottom of the question, it's actually shown in 2 things. It's added to my balance brought down, so it's a financial fixed asset increase, but it also has to go in as income. So just make sure, and it's always the same. Anytime they say 20 euro, 50 euro, 100 euro was earned by the investment fund to date, you add it on here for your balance carried down for your financial fixed asset because it's increasing the amount you have in your investment fund, but it's also interest. And they show it at the bottom because you only find out how much you have at the end of the year. That's a gain for the year. So I'm going to show that there, 25. My expenses from my wages and the general expenses note, I had a P&L figure here. Light and heat, that was my P&L figure. Loan interest, that was my P&L figure. And insurance, that was my P&L figure. Again, as I just said, these are all my expense figures here. My loan interest one is there. If I was to go back up there, we'd have another one in insurance, 600-700 and so on. So there are my expense notes. I total up my expenses, and my expenses total up to 84,710. This is my gross profit. I add my investment interest because it's a gain, so that increases my money, and then I take away my total expenses, and I'm left with a net profit at the end of the year just shy of 140,000. It's 139,115. That's my net profit. Let's go down to my balance sheet. So my balance sheet here, don't forget your goodwill at the start. Goodwill is 18,000. Where did I get that? Well, again, at the start of the question up at the top, I have my purchasing price minus my worth of the business gives me my goodwill. How much you paid for the business minus how much it was actually worth is your goodwill. That is my first figure. It is 18,000. My next figures here are quite simply, this was from my buildings note, the building I bought plus the building I had at the start. My vehicles, again, we can see from vehicles and furniture. Vehicles was here, my delivery van of 28,400. There was no depreciation. And for furniture, we paid 14,000, but remember 25% of it went to drawings. So for my furniture note, it was the remaining 75%, because remember here 25% was to drawings. So remaining 75% from my note was 10,500. Again, you can just quickly see it here. My furniture note that I had 10,500. They are the beginning of my fixed assets. I also have my investment fund. Again, don't forget your investment financial fixed asset, 4825. It's not a fixed asset, it's a financial fixed asset, and that's where that goes. So now you actually get to see what all of the fixed assets are: intangible assets, tangible assets, and financial fixed assets. These are the three. So that's they're the different headings for financial fixed assets we hadn't fully seen before. Current assets, quite simply at the bottom of the question, my closing stock was 16,400. My debtors is 20,200 given at the bottom. My bank, we worked out in our note. My cash, we were told, was 400. And my insurance prepaid, we found from our note again that we had prepaid insurance. These are all figures at the bottom of the question that we had seen. This is my current asset for insurance. And for my bank, well, it was simply we just checked our bank account, seen all the money we got in, all the money we paid, and the remaining amount was what's left. My liabilities, quite simply, are the same. My current liabilities, the amounts falling due within 1 year. 30,400 is my trade creditors at the bottom. Electricity due is 480 at the bottom. Loan interest, we had found from my loan interest that there was 750 due. And there is nothing due in the short term from my loan repayment. The last question there wasn't, because all 180,000 is a long-term loan. Loan interest, again, just to show that we had found that this was the different 750, it was my current liability. And remember, from the loan, the 180,000, none of it is due in the short term, it's all due in the long run. Therefore, it's not a creditor falling due within 1 year. Total liabilities short term add up to 31,630. I take that away from my current asset. I have a positive figure of 111,620. That is short term assets. This is my long term assets. Again, I added, make sure actually for this one, it's a mistake people make. I don't like to show 4 columns because I think it's messy. So I just add this with the 3 here. And it's okay to do that. So these 4 add up to 771,900. And then I add my investment fund to give me 776,725. I add the 111,620 and my net assets are 888,345. At the bottom of the question, my long-term liabilities are my loan. Again, that's the loan, 180 grand. We said none of it was owed in the short term, so it was all in the finance buy. My capital is 590. Well, for capital here, we can see at the top that when you buy a business, you purchase the business for 590. That's how much that P. Lynch put into the business. So that's how much capital they put in. Dividends is money that they would have lodged in. Dividends from, purchasing from basically from other businesses or for this business that they have put in for 3,000. So this is capital introduced. Dividends, again, whenever it comes up, you just add it here as capital introduced. Net profit and drawings are my last two. My net profit is just gotten from the first part here. And my drawings was the total that I got from that note. This is worth a lot of marks because, there's multiple different things that go into getting that figure. So at the bottom, I take away my drawings. It's always taken away in the finance buy. I add everything else up here. It gets me 708,345. I add it on to my loan. And again, showing here both sides balance. So that's the end of that question. That is the corrections for the 2007 question, and I am going to kind of talk through the next question I'm going to give you is the 2015 one for homework. Thanks for listening.